today's episode of Future Says, we have Nikita Fadeev, portfolio manager at Fasanara Capital and the founder of Fasanara Digital, one of the fastest growing market-neutral crypto hedge funds. Alongside his work at Fasanara, Nikita has also established the Quant Conference and was listed in the Forbes 30 Under 30 list just this year. Welcome to Future Says, Nikita Fadeev. What a thrill to have you on the show today to talk about all things cryptocurrency and Fasanara Digital. It's difficult to do an episode about cryptocurrency because things change all the time in this space. Watch the news, read the news. There's always some story there about cryptocurrency, for good or for bad. There's good news. Recently, El Salvador accepting Bitcoin as a legal tender. The bad news is China and other countries starting to clamp down on regulation. Good news, big advocates like Elon Musk talking about his personal, his corporate investments. Bad news, he turns around the next day and says Tesla are stopping accepting Bitcoin because of environmental concerns, which I'm sure we'll talk about later on. There's a will they, won't they story with Amazon at the moment that is causing these major price swings. And all of this comes in the shadow of Janet Yellen in the US, of Mairead McGuinness in the EU, talking about how to start maybe regulating this sort of space. So it's not an industry for the faint-hearted, Nikita. Better you than me, but I can't think of anybody better to speak about it than yourself. So I'm really delighted to have you on the show and to kick things off, interested to hear from you a sort of high-level state of play within the crypto space and the sort of role Fasanara are playing within it.
Sure. First of all, thank you very much for having me. Really excited to be here. I think it's really challenging to sum up because there is so much that's going on. But let me perhaps just give you a couple of pointers. So I think one of the most exciting things as of now is the world of DeFi, decentralized finance. So it's really emerged actually over 2-3 years ago, but picked up the steam last year, and so the term came about DeFi summer, and since then things cooled off, but there has been really substantial investment in the space, and the idea is pretty simple. It's like really democratizing the financial services industry and like making anyone able to interact with some of these native protocols and generate some yield, provide liquidity, and essentially just multiply your assets. So that I think is one of the really exciting things. And the total value locked spiked to over 160 billion. That's with a B in a span of just a year and a half, when it really became something to be watched. So that I think is one thing. Then in terms of other major trends, and I think that kind of has been coming about for quite some time now. But I think institutional investors and big VC funds, family offices, hedge funds, crypto reached the escape velocity, and now kind of not investing into it, or at least not preparing themselves towards some exposure becomes an issue. And I think a lot of the people brought the matter over the line and started getting ready, and some like even already deploying good amounts. So I think that's kind of is broadly the landscape, that a lot of eyes from sophisticated, very well funded companies, from corporates and so on, as a tool to get exposure to innovation. But at the same time, on the flip side, there is a lot of regulatory uncertainty that comes about. But I think longer term, it's quite healthy, and it will be proved to be useful for the industry. And so kind of for us, so what we are doing is we're essentially helping the markets to be more efficient. So we're big liquidity providers on basically all of the major derivative exchanges. And we're kind of sitting at the crossover of traditional finance, because Fasanara Capital being a traditional fund and kind of crypto native firms that are doubling down on the adoption. And so we found ourselves to be there, and quite excited by the general trends.
And can you tell us, Nikita, about the sort of early days of Fasanara Digital, why it was set up, how it was set up, and who set it up?
Yeah, it's actually like quite interesting. So we started back in 2017. So it was just a research team that I created back while at the university, and we were just building strategies for crypto, because we thought that this is a market that is very inefficient, very volatile, hard to comprehend and understand, and it's at the same time I think very few people knew what was going on, and like I had a good level of sophistication. So it felt like a good bet to take with low barriers to entry. And so with this idea in mind, we essentially doubled down on our efforts in crypto. And so then at some point we had good results in terms of models and trading. And we felt that we should try to monetize and like pursue it as a full-time venture. Closer towards the graduation, and one of the ideas was to open up a fund and run our strategies, because we were ignorant enough to think that that's one of the natural courses that can take place out of uni, and that actually helped us, I think, to have enough conviction to like push through. And so we because I knew the CEO of Fasanara from before. I was working there for a little bit, and we met, and Francesco really liked the idea of getting exposure to crypto in a market neutral fashion. And so with this idea in mind, we joined, me and my co-PM, as just two of us, to essentially build out what's now Fasanara Digital. And kind of little by little, we're able to raise a little bit of capital, then some more, and kind of we're making like baby steps. But at the same time, over time, we gained like enough conviction, built enough technology infrastructure to support all of this activity, and kind of went from there.
Yeah, and is that a trend you see within an industry as new and as novel, maybe as cryptocurrency, to invest in youth, to invest in people coming from university? I mean, at the end of the day, it's more of an even playing field maybe within some of these newer industries.
Yeah. I think it's like a lot can be said on this, but I think the broader idea is that there are still like no experts really. Like some of the latest advancements, they're like months old, and nobody has been doing it for years and years. And those guys that watch the trends, read the Twitter, sit all day long in those Discord channels, interact with the community, they kind of get the power of the community and of the network, and really like get messy in terms of like trying to understand inner workings of different protocols. And so I think it's not that it is difficult, but I think oftentimes people that just get fascinated by it and like really decide to double down on this and get really really deep, they're like people that haven't worked too much in the industry and haven't got their mind constrained in some ways around what is feasible, what's not feasible, what can be done, what can't be done. So they kind of come with this naive idea that like this can be done, and somehow they manage to pull it off. So if you look at some of those stories around DeFi, where some of those protocols are started by guys that are 20, 25, 30 years old, and it has billions and billions of dollars in value, total value locked in them. For example, the founder of Uniswap, like really young guy, and in some days Uniswap processes more volume than Coinbase, with like 10 employees, and like been around for just a couple of years. So it's really like astonishing the pace of innovation, and there like I just haven't found any correlation between kind of age and knowledge. More often than not, it's actually negative correlation. Like oftentimes it's the younger guys, that are hungry enough to really be immersed to it 24/7. That's kind of that are progressing and that are ahead of the curve. Because if you think about it, if you switch off from the market on the weekends, you lose 2 out of 7 days, and and after a year, that's like really adds up. So I think those are some of the points I would raise.
So for all you young kids out there listening, do listen to Nikita's advice there. The world of opportunity, I think, for everybody there. But as you say, I think there's a lot of young people in this space. There's very little barriers to entry, as you said as well. But of course, I'm sure you can still learn a lot from the bigger players, like Goldman Sachs are now committing to cryptocurrency to a very large extent. It's no longer a secret, definitely not. Is there a lot of things you can learn from these bigger institutions that have been trading a lot of the more traditional asset classes? Are there similar strategies? Is it all completely brand new? And what exactly can you learn from these more experienced people, albeit not necessarily within crypto?
Yeah, yeah, I would say like, I mean, maybe I'll just make one step back to make a step forward. So I would say that from the traditional kind of firms, one thing that they do well, especially those that existed for a long time, is kind of risk management and like making sure that they don't blow up and they don't make costly mistakes that jeopardize the future. Because the flip side of this ambition and like ignorance is that sometimes you just do like very stupid things. So like as long as it's not like it doesn't kill you, like it's fine, but sometimes it does. So you want to be like really cautious with choices, and kind of always think in terms of like what can you lose. And I think this is the spectrum. There is no like right or wrong. It's just given like what you have, whether that given choice makes sense or not, and this is open to interpretation. And so for some firms that already have like a huge infrastructure, like been around for a very long time, kind of taking a big bet on crypto is a threat, and like it's not given that like or at least back in the day that crypto is going to exist in a couple of years time, and so it's like a big risk but potential not a big opportunity. And so I think one thing that can be learned from those firms is again like how to strike a good balance in terms of what is good enough, in terms of like infrastructure, in terms of reward, in terms of risk. But at the same time, whenever you are in a hedge fund business or any business for that matter, you want to know as precisely as you can what's your edge. You want to know like what advantage you have, and like the more advantage you have versus the other guys, then the better you're gonna be like on average. And so like one of the bets that you want to inherently take by being in crypto is like being smaller and more nimble. So you want to kind of use their size to their disadvantage, and kind of progress quickly. And at the same time, like you want to try to understand quite well as you can what's their business model, what kind of steps they would take, like what kind of model would they try to move towards, and then do something different. Like when they zig you zag. So you want to kind of choose competition and fights that nobody else is taking, but at the same time that they are scalable, because you don't want to be king of small pot, and there is nothing going on there. You want to kind of predict the trend, and ride it.
And when they zig, you zag. I love that. And I guess the other big image I have in my head when we think about capital markets, we think about trading institutions, we think about people on a trading floor making algorithmic decisions in nanoseconds, really, really speedy, ultra real-time decision making. And again, the zig, you zag. It's all about speed. It's all about different price differentials across different markets. Does the same need for speed exist within cryptocurrency? And if so, how do you sort of deal with that?
Well, yes and no. So like like you can take basic measures to improve your speed. Um, so you can locate with the exchanges in the same data center. With some of them, you can co-locate, although that's pretty rare. Then like you can ask or get some preferential connections around like some rate limits and things like that. And that's all nice and so on. But then you kind of again you want to choose the fights smartly. So like you don't want to get into the arms race on the HFT side, where like some people that's their bread and butter, and potentially like what's your upside there is like might not be that much. Especially when it's winner takes all. That being said, in crypto it's a bit more democratic because infrastructure on vast majority of the exchanges is pretty bad, and there is like big jitter and like they're not really performance optimized as they are like in traditional markets, and so given the randomness in the in the response time, it can somewhat make the that race more let's say democratic, so that more people can participate in it, and there is a big randomness component. And another thing to say is that a lot of these exchanges are located in data centers all around the world, and so if you want to collect and like get access to liquidity from all those places, you're kind of already running quite large amounts of latency. And so, but then again, it's an optimization game, and some people do it like extremely well, and then so you might not want to compete with them, and rather do something else.
Yeah, yeah. And I read a stat recently that there were 5 times the volume in crypto trading as there is in general stocks now. So there's a lot of activity there. There's definitely a lot of money to be made with these market inefficiency, Nikita. Um, Tell me then. So obviously we know the potential here. Tell me about some of the things that keep you up at night. Is it regulation? Is it this sort of green computing? That sort of challenge? Is there anything particularly that keeps you up at night?
Well, I guess market itself keeps me up at night. That's like the immediate reason. But like in broader strokes, I think because it kind of comes down to like what kind of business model and strategy you're running, and what effect it's going to have. And so kind of back in the day, we thought that one of our biggest edges is that like we're pretty young, so like we should rather focus on achieving stability of returns and running market neutral set of strategies that might not make 1,000% when Bitcoin goes parabolic, but save preserve the ship and be afloat when the market goes negative. So I think regulatory risk is obviously one of the largest, and it can damage severely like the whole industry. And one of the weakest points are some of the exchanges. For example, Binance recently been on a big streak of bans from all sorts of banks, all sorts of countries, which obviously is not great, given that it's by far the largest crypto exchange, and a lot of volume and liquidity is concentrated there. At the same time, I think the green and green arguments or how clean the mining of Bitcoin is. To be honest, I'm quite relaxed about it. I think there is quite large gap in understanding between some of those people that are defaulting to easy conclusions and kind of go from 0 to 1 without doing any due diligence and like looking into the details. And I think Michael Saylor did a fine job in articulating some of the data points and assembling this I think it's called this mining council or whatever it's called, where there is a wide collection of companies that are heavy in crypto and some of the largest mining firms, and the statistic is actually quite welcoming and much better than what people thought before, and even the arguments of Elon Musk and so on. And if you want, we can go into more details on that. But I think people, default to the conclusions too quickly. And I think there is like a huge trend towards greener energy in broad sense.
Yeah, and I think that's always the frustrating thing when we see these people presenting in Congress, even on a thing less complex as Facebook and social media, and they don't grasp the basic concepts. I'm sure within crypto, I mean, I can't get my head around it for the best of time, Nikita. So, it's a difficult thing, and it must be very difficult for people in the industry to see a lot of the fate in the hands of these people making the regulation, making the legislation. You mentioned Elon Musk. I mean, crypto is so associated with that person. As I said at the beginning, the main reason he said for dropping Bitcoin as a way of purchasing Tesla vehicles was the environmental concerns. He's slightly rolled back on that in recent weeks, but yeah, keen to pick up there and your thoughts on that.
Yeah, I think there is like a lot that's been done behind the scenes. I can't believe that he did the $1.5 billion purchase of Bitcoin and didn't quite appreciate how the mining works. I think he knew that really well. I think where the issues came from are perhaps from his investors, which potentially once this argument of how green or dirty Bitcoin mining is surfaced, they perhaps made an argument that they wouldn't be able to invest in Tesla or hold its stock, some of the pension funds or other type of investors, which again I think they defaulted to the conclusion quite quickly, and so I think overall, Elon Musk said that they will start to accept Bitcoin for Tesla, and then he rolled back on that. But then he tweeted a couple of weeks ago saying that once he sees a good trend for mining in terms of going more green, and at the same time when he will see certain percentage of energy used for mining being green, he would be happy to resume that. And his recent participation in that conference where he was there with Cathy Wood and Jack Dorsey, I think they it just shows you his passion for Bitcoin and for crypto more broadly, and the fact that he owns himself and through SpaceX and through Tesla is a testament to that.
But how do we get there then? His biggest concern is the biggest concern of many people: the environmental after effects of some of this Bitcoin mining. As Elon said, if that is reduced, then it's easier to invest in this type of thing. Do you have any thoughts on how we could potentially reduce that?
Well, I think again, like we are already in a pretty good point. In terms of the trends ahead, using more and more like reusable, renewable energy towards mining Bitcoin and essentially educating some of the energy producers on the matter on like how their excess supply can be monetized and utilized is an obvious step in that direction. Then we also need to see how the full effect of the migration of miners from China, because the Chinese government banned mining, and so a lot of the miners flew in Kazakhstan, Iran, and US and Russia. So we need to see how that settles down. But I think overall a lot of companies are working on this, and just purely by the nature of energy production, like it's it's not always stable, and then sometimes during some periods of the year you have big excess of supply and like little need for the energy. In some other cases, you have a lot of need and little production. So by normalizing that and using the excess towards Bitcoin mining, I think it can be a big leap forward in that direction.
Yeah. And it's interesting to note, Nikita, when asking people about challenges, generally, this is in other industries, but generally the topic of the coronavirus comes up in terms of how they've had to restructure their organizations, how their products and services have been affected over the last 18 months. You haven't mentioned it yet. Has it had any effect on the crypto marketplace at all?
Oh yeah, big time. I mean, I think it was a big trigger for big Bitcoin bulls like Michael Saylor to consider Bitcoin as a way of storing wealth, and because there was so much money printing done over the past year and a half from governments from all over the world. So existence of Bitcoin and its transparency, its disinflationary, disinflationary setup, its non-sovereign status and fixed number of a capped total supply. I think it's quite appealing as an investment, and became much more so when the money supply increased so much, and I think a lot of people realized that and essentially started to deploy to crypto as a way to store their wealth and get exposure to the innovation and the future of money. And in terms of, I think the industry itself, perhaps there hasn't been too much of impact. I think crypto historically been quite diversified in terms of like geographies and like decentralized, and people were quite used to doing business in like remote fashion. But for us personally, like we've seen a huge growth in the interest for crypto, like post March, perhaps April time last year. There was like a huge interest from investors how to get exposure to the market, and some started with some low volatility type products. Some went to ventures, some went to just outright holding coins. So it's a spectrum, but crypto really suffers big time in the conversations of big investors back then, and since then, like it was a lot of who moves first, who replicates, and all that.
Yeah, an exciting ride, always changing. But just at the start, Nikita, you did mention a big interest in NFTs. So can you please educate me and some of the listeners on that and on the emergence of that over the last few months, really?
Sure. Yeah, I mean, like NFTs became like really popular, perhaps from start of this year, and as of recently, it became like really parabolic. And the simple idea is that you create some art and you store the record of all of the transactions with this art piece, who owns it, for what price it was sold, and ownership on the blockchain. And some people don't get the idea. How can you spend hundreds of thousands, if not millions, for some art pieces, even tens of millions, for essentially an image, just for the fact that you have a record on blockchain saying that you own it, and the other person don't, and like that's the difference between paying having $60 million in your bank or in somebody other pocket, which is not what happened with people. Like his art piece sold for 69 million. But I think that there are a couple of interesting angles to get started thinking about it. The first one is that art is something that's been around for a while, and its scarcity is appealing. And I think it doesn't take a big leap of imagination to spot the trend that world is going digital, and the real world and metaverse will start to merge more and more. And people already start caring about their virtual personality. In some cases, quite a lot. And in some of these games and so on, it's like a proper industry, big size industry, and that only going to increase. So that's one thing, and the other one is crypto is a lot about ego and a lot about flashing things, just like in the real world as well. And so by buying some of those crypto banks, which now go the lowest is this like $100,000 or something. It's like bragging rights, just because there are 100 or 10,000 of them, and you have one of them and that's a unique one. By definition, nobody else has that one, and just because you have it, and there is a record on blockchain, and anyone can verify it within seconds that you own it, kind of gives you the bragging right that you can afford it, and that you have it.
It's amazing, and it just goes to show again how fast these things move from emergence, as you said earlier this year, to now. It's all people seem to be talking about. It's really, really amazing. And on that point, Nikita, and we are running out of time, but are there other things that you see as being a big trend? Where do you see, what does the future say for you in the next 5 years and in the next 15 years? Where will we be?
Well, so for us, it's difficult to be like precise. I think I would generally like try to plan for like short term with an idea to enable steps for the long term. But the way we kind of think about long term is that like we want to optimize for impact. We want to like being able to get into position of touching lives of like as many people as possible. So immediately like what we are looking to do is get deeper and deeper into crypto and essentially potentially launch some more funds and offer more products to the investor base. And use that to enable next steps of creating something of value.
Amazing! What an exciting future! Again, another statistic I saw today was that the number of crypto users has doubled in the last 6 months, from 100 to 200 million. So you're not alone. This is unbelievable potential in this space. It's crazy exciting. I'm personally very excited by it, and what I will include in the show notes after this episode is a link to Fasanara's monthly commentary as well, Nikita. That is my Bible for all things fast moving in this space, as well as the Quant Conference, which is something, of course, you organize every year. So, any final words of wisdom or pieces of advice for the listeners?
Well, I guess one thing that I get to ask a lot is how does one get started in crypto? And like the simple suggestion is just try to touch as many things as possible. Just get yourself immersed to it. Try to understand how things work. Ask as many questions as possible. The community is really inclusive, and by really like exposing yourself with open mind, you can get the chance, to get to see future being created.
Brilliant. Exciting. Words of wisdom. Thank you so much, Nikita, for joining. I personally learned a lot, so I hope everybody else did on the line. And I'm sure we'll talk to you and see you soon in person, I hope.
Thank you very much.
Thanks for watching. Now, next up on Altair.com/Future Says will be Vanessa Eriksson, Chief Digital Officer at Zensiact, who'll be speaking about all things autonomous cars. Hope to see you there.